You guys remember in the mid 2000s when infomercials dominated the airwaves, and every single night at the end of all the programming, you'd get these like hour-long commercials for things. Well, one of the most famous ones was this thing called the slap chop. And you would take your vegetables and put it on top, and you just slap it on top like that. Well, Bitcoin's in the slap chop right now. Absolutely just tearing people up and down. Almost impossible to trade, in my humble opinion. But I have a great trader today who's going to tell us what he's looking at on Bitcoin, and more importantly, to educate you on how he looks at it and why using Fibonacci levels is so important for traders. That's Fiboswanny, of course, friend of the show. So I'm going to do the news. We're going to talk to him, everything that's going on in the market. You don't want to miss it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and use a golf tee to repeatedly attempt to hit the like button by dropping it on your keyboard. I really did that. I dropped 3 golf tees, pun to keyboard, as they would say in the islands. Pun to keyboard. Hope you guys are having a nice Friday and that you're not bothering to lose your money like a jackass attempting to trade this chop suey of price action. As you all know, I was attempting it there until a couple days ago, exited, and pretty glad that I did and that I'm not attempting to manage anything in this market. I hope you guys enjoyed the round table yesterday from a bunch of epic chads. CEOs from across the world in the crypto space had a lot to say about what's going on in the market. It's really crazy right now to think how far we've come. I keep mentioning this, but the very fact that we're talking about, Bitcoin and crypto's role in a war, in a conflict, that the president of the United States is releasing executive orders on crypto, that the entire world is talking about inflation, the value of the dollar, and they're putting crypto in context of that. Really important to zoom out and realize that we're not going anywhere. There's a legitimate asset. It's now a part of the international conversation, and that's only going to accelerate. So all the narratives in the world and freaking out and panicking, none of that shit matters. Just be patient, zoom out. This space is only continuing to grow. So let's dig in really quick to the news before I bring on the guest and we start talking about charts. Department of Labor cautions against crypto and 401k plans. You'll see a theme today, and that's that government agencies in the United States and other first world countries like the UK, they hate fun and they want to come to your house and kill your pets and your puppies. And they're going to turn off all the movies that you like and remove your internet if you're watching anything that you enjoy. They hate fun. They hate fun, and they hate allowing us to make decisions for ourselves about our finances. But yeah, of course, the Department of Labor. What does the Department of Labor have to do with this anyways? Let's be real. But warning against crypto and 401k plans, right? God forbid we accept that crypto might be a legitimate asset that people who have their own brains and thoughts might want to invest in for the long term. We definitely need Big Brother, the government, to come in and tell us what we would like to. I mean, what should we do? Just leave dollars in our 401k? That's going to go pretty good for us. That's going to go pretty good. Hey, you know what we should do? Probably maybe go back a month and invest our entire 401k in Facebook stock. Right? That'd go good. That went down like 35% in 2 hours. But crypto, not the cryptos. Yeah. They're saying they've seen an uptick in firms marketing crypto investments for 401k plans in recent months. These defined contribution plans usually offer a variety or menu of investment options to participants. Some of these firms are now marketing crypto as a menu option. Get me to that restaurant where crypto is a menu option. Just eat it up. Eat it up. Eat it up. Absolutely nonsense that they would be advising against this, but par for the course. And you want to know who else hates fun and puppies and probably unicorns and all Disney childhood movies? And they probably don't even like Goonies, which is one of the greatest movies of all time. UK FCA orders operators to shut down crypto ATMs. Any crypto ATMs in the UK are operating illegally, the financial watchdog says. Totally. Why would we want people even to be able to use an ATM for Bitcoin? But yeah, their point is that they're not complying with money laundering organizations. I tend to when I want to like launder my money, I tend to go to the grocery store, head right into like Kroger or Wegmans or something with all the money I'm trying to launder, and do it on the Bitcoin ATM in public. You know, I also like to do it in pennies. I like to wrap all the money I'm laundering in pennies and take it to a Coinstar machine, dump it right in there. But yeah, there's about 81 ATMs in the UK. Apparently, Bitcoin ATMs are now all deemed illegal, and if you use them, you can have fun staying poor. eBay shows investors digital wallet as it explores crypto and other payment options. So they showed the digital wallet, but did not go as far as to say or admit that they were actually going to allow people to use crypto. But pretty huge. We've been seeing news about eBay potentially coming into the crypto space now for quite a while. This is what they said. He reiterated that the company is exploring new forms of payment to add. I don't know, man. It's either like seashells, golf tees, jawbreakers. Those were those candies that we used to eat when we were kids, or crypto, right? I mean, what other new forms of payment could we really even be talking about? So guys, eBay, gonna go on eBay and be able to buy that, I don't even know, like that broken down big wheel that's $13 off that you want for your kid from Lincoln, Nebraska. You're gonna be able to buy that, but do it with Bitcoin. Be able to do that with Bitcoin. Listen, Goonie, Sandlot, it's I don't even know how to say this, but putting those two movies, Goonies and Sandlot, in the same sentence is an insult to good taste. Sandlot's fine. Goonies is one of the greatest theatrical productions of all time. It's insulting. Insulting. Sad. I find that sad. Here's a story that I didn't expect to wake up and read today. OnlyFans donates 1.3 million worth of ETH to Ukraine. Dow, that's a lot of stripping. To get that, to get 500 ETH and send it. But apparently the founder of OnlyFans is actually a Ukrainian American. So in all seriousness, this is actually really incredible. And once again, very clear evidence that it's easier for crypto enthusiasts to send money directly that will have impact on the ground in Ukraine than it is for almost anyone else. So maybe we should stop talking about all the negative garbage that comes with crypto and start talking about the good that it's actually doing. You know what? I want to jump into Bitcoin right now. Here you go. Bitcoin jumps to 40K as Putin. I don't want to do this article. Putin sees positive shift in Ukraine talks. Oh, so we believe Putin now. You know, like markets are unstable enough, crappy enough, hard enough to track that like literally now, like when Putin says something, apparently markets react, but we're giving Putin credit now for Bitcoin going from like 38,600 up to just above 40,000 before it immediately retreated. Or maybe just a thought, maybe it has nothing to do with Putin and it's just traders doing a whole bunch of trader shit and the market's just doing this and it's an epic roller coaster. But now I don't, why is your mouse circling his junk? Is his junk his forehead? Someone said, why is your mouse circling his junk? But like, I don't know, is his junk his forehead? Is that where Putin is Putin an anatomically incorrect human person? I don't even understand that. Don't understand. But if his junk is on his forehead, then it would make a lot of sense for why he's so angry. I don't know. I'm not circling his junk. But guys, so I have a special guest right now. You guys know him. Famous from the chat. Very famous from the chat where he chats all the time. One of Twitter's favorites as well, Fiboswanny. I'm going to take this off. What is up, dude?
Hey, what is up, Scott? Thanks for having me.
You've like we were talking about, you have a lot of light. It's like the crypto gods are shining upon you.
Yeah, I live in a house with windows, so it's tough for cameras.
I also live in a house with windows, coincidentally.
Oh, wow. That's cool.
Yeah, you might not know that about me, but I prefer houses that have windows generally. So
Nice.
listen, you have a very unique approach to charts, to markets. You and I have been going back and forth offline, sharing stuff for quite a while. And I thought it would be really valuable. People, I think, are probably super tired of my charts, right? It's like, oh, God, look, it's got added a line this week to the same Bitcoin chart. So I thought it would be a really good exercise to bring you on here and let you talk about your fib theory, how you approach markets. So without further ado, I'm just going to pull your chart up and we're going to let you do it. And if your cursor starts bugging out and not being on where you're pointing, I can't tell you, tell me, and I will take our pictures off, and that should help.
Okay. Okay, cool. Well, let me introduce myself first because a lot of people might not know who I am. But I'm Fiboswanny. I've been in the commodity world for almost 20 years now. Started out as a cattle and grains futures and options trader for about 6 or 7 years. And that's where I've really learned a lot of this TA. And then I went into the energy world where I've been there for the last 17 years. And I'm the head TA guy at an energy consulting firm for my day job. But one of the things I've been wanting to do and I've been doing for the last few years is helping people in the space here learn more about Fibonacci and charts. That's really what I like to do on the side for some moonlighting. So I got a little bit of experience. So hopefully that experience comes out with what I do. So Fibonacci is an interesting thing, but I want to show something, and hopefully I blow some minds here. Let me use an analogy here. I'm a little bit more like old school hip hop and not modern day hip hop. I'm a person that uses maybe 2 to 3 beats instead of 6 to 8 beats. So it's more simplicity. So I use the RSI, I use the ADX, and I use Fibonacci really as my fib theory. But what I do with the RSI is what I've learned over the years, and I've come to put this theory together. Is I kind of break it down a little further into zones that I call a bear zone and a bull zone, and I kind of have them here on my chart, kind of marked in red for bear and green for bull. But what I do is I do some historical analysis to find what those zones are. All the zones are going to be different for whatever you're looking at and whatever time frame you're on. So it takes a little bit of a back knowledge of how to find those zones. It has to do with trend lines, Fibonacci, and using some of these indicators that I mentioned to find where those zones are. So the main gist with this is when things go from a bear zone into a bull zone, that's going to be the buy. And then that's going to be where the fibs are going to be placed. Because one of the interesting things about my theory is my fibs are going to be placed at areas that people don't really use as a spot to start your fib. And I'm going to show that here. I'm going to use this area here on the daily chart just as an example, and then we can always look at other charts if we need to. But what I'm looking at down here on the RSI is we popped up into this bull zone right here, and what that does is it creates what I call a threshold. It's basically where I measure the psychology in the market, where I feel the behavior is changing. To where the emphasis of the bulls are coming back into play. So it's kind of changing the sentiment for me. So what I do is I'll also look at the ADX, and I don't want to go into major detail, but on where to start the fib. But in this case, it's going to start right on the threshold area right here. So I'm going to start the fib at this spot and work your way up. But what I use mainly is a 38.2% level, which I call the shallow fib, the 61.8%, which is the golden ratio that a lot of people look at, and of course the 0 and the 100. And then I use these extensions, which we'll talk about here in a second, which is the 127 and the 141. And that zone right there is pretty important when it comes to taking profit zones and those kind of things. So what I do is when you go into the zone, immediately you mark it by. So when we get into the bull zone, you mark it by, and what I do is I follow the fibs on the way up. So what I do is you make certain highs, and if it retraces back to the 38.2, you actually put in another buy on the retracement. And in this case, I mean, it's going to be hard to see, but this one worked its way down but did not hit. So as it made a new high, I bring it up, and then the 38.2% level was at 39.2 right here, or 39.3 rounded up. So my first buy, I just kind of put these up here so you can kind of see, because it's kind of hard to tell where the actual numbers are. But the 33.9 was the first buy, which is going to be the rounded up area based on market, you know, that kind of thing. And then the next buy was on this retrace of the 39.3. Another thing that I do is I always look back at previous highs. So as this starts to move up, this high over here, and this has a lot to do with like what your horizontals look like, Scott, that I kind of follow on yours.
Yeah.
What I'm going to do is I'm going to put a Fibonacci on this here down to the low. And then this zone between 44.7 and 46.5 is going to be my first sell spot. So as this comes up and makes a new high up in here, you're going to be selling and taking profit in this zone off of that first buy. And that's what this is up here. And then as it keeps going up, as you can see, it retraced back down here, but did not get down to the 38.2. So I did not rebuy. And then you go back up, you know, keep moving the fibs up as the market goes and the market goes. And then it went up to the high here and retraced back to the 38.2 right here at 45 or so. I did buy right in here, but it broke down on the bull zone or the bear zone, but actually it was kind of a break even. And that's one thing that's nice about this program that I do. It kind of mitigates the loss and follows the trend. Isn't that what everybody wants? So that's why I kind of made this kind of a more simplistic way of looking at things. Just using the RSI, ADX, Fibonacci, things that people use, you know, for a long time. You don't have to get any craziness, just kind of keep it simple. And then the same thing is if you go over onto this zone over here, same kind of thing. You break into the bull zone. I'm not going to talk about this one. This was just in and an out. It really didn't do anything on the downside, because it does work to the downside, and I'll show that here in a second too. But just real quick, same kind of thing. You're gonna work your way up on here. You're gonna have the initial buy, work your way up, and just kind of keep moving the fibs as the price goes up, and then you're gonna get into areas of buying, which this one didn't have too many. I put all the different buys on here, so I didn't want to go through every single one of these, but you can kind of get the gist. As we move into the bull zone, we're going to get into a new threshold. That's where the psychology for me is changing. So you want to ride the trend and go that direction. And then just real quick, works the other way. Right here, you would sell, and the same kind of thing. You'd work your way down, and you'd sell more here at 56.2. Work your way down here, and then up here you'd sell some more and work your way down, and those kind of things. And of course, you're going to use just like we did over here with these. If you're working your way down this way, you're going to use the fibs going this direction. Oh, I meant to put it on my. I always start where my thresholds are. So right here, as this moved down, this was going to be your first target right here at the 100%. And then the next level here at the 127 to 141 zone right here would be your, I got the magnet on, so it's moving around, but this would be your next sell down in here. And then also a possible buy going the other direction. But then we've hit into this area of consolidation. Like you said, we've been whipsawing back and forth, whipping people around. It's been doing okay, getting in and out at the right prices. So in this area here, you know, of course I bought, but you sold and kind of broke even, did the same thing here, broke even. And now we're in this, same kind of area here where it went down and kind of almost went out of the bull zone back into the bear zone, but we're still holding. So I'm going to still hold my longs, that I have on here, to, kind of follow through on that. But quickly on the 4 hour, same kind of thing. Here's the bull and bear zone. Definitely came down last night. Did not break the bull zone, which is great. It's holding right at my threshold, right at this support level right here at 38.6. It did wick down there a few times. I look for 3 consecutive settles underneath the line to give me a break. So the wicks down here didn't really matter, but it's holding. It held the zone. Momentum still sucks, so we're probably still going to be maintaining this range. but I'm holding my longs and that I have in here. I bought down here, and then I bought at the threshold, and then I actually bought again on a dip. So I actually have 3 buys in here at an average of about just above where we're at right here. So if this ends up breaking into the bear zone, I'll just break even and move on. But hopefully we can get some more buying interest and start to get this thing to the upside. So I know I'm going pretty quick. I know I don't want to take up too much of your time, but hopefully I'm blowing your mind a little bit on how I use the RSI. I do use the RSI for divergences and those kind of things, which is absolutely key. But I've taken it one step further and kind of dive in to find out where that psychology changes are in the market.
Yeah, I love it. And there's a lot of questions actually going through. I think people are mind blown and impressed. I mean, I think that's like more than anything, this shows, we talk about all the time, like finding your own system and sticking to it, right? It doesn't have to work. Yeah. I've never seen somebody pull a fib based on a vertical determined level, but it works incredibly well, as you've shown, right? I mean, I'm a simpleton.
I've been doing it for a long time. It works really well.
Yeah. I mean,
the reason I came out in the space is for people to take it and build their own thing from it. And, that's the key. Use it as a tool. Don't mimic me, just but kind of take it and make it your own and figure out what you can do with it. That's really what I'm here for. So.
Yeah. Someone asked, Scott, what's your historical opinion of using fibs for your analysis? I mean, fibs are one of the most consistent, and frankly, if you're just using it in the most basic manner, one of the easiest and most consistent tools that there are, right? I mean, you pull a fib from a low to a high, and you'll find that more often than not, those levels line up with the same horizontals that you would draw anyways. It's pretty incredible, actually, how consistent that is.
Yeah, and that's why I like what you do with your horizontals, because when my fibs match up with yours and they have that confluence, it really helps.
Yeah. So, I mean, this took you obviously a very, very long time to develop. For someone who's looking, people keep telling me I'm muted. I don't think I'm muted, but for people that are looking to maybe incorporate a part of this or to get a basic understanding, is there a way to sort of reverse and rewind and utilize this without having the full breadth of it? Or do you really need to like work your way into the entire system?
It's basically it's an art and a science. The art part, the art part is experience. So I kind of give the basics to people that follow me on the RSI, so they can kind of learn how to build the zones for themselves. But it is an experience thing. It's not something you're going to just learn in a couple hours. You do have to go back and do some historical analysis and find out where those best psychology spots are based on the RSI. So it takes a little bit of work there. The rest of it, I think, is pretty easy, but it's maintaining those zones. And once zones are built and you've done a good job of the historical analysis in your back testing, you don't have to change them very much. Every once in a while, markets do change and things adapt, and the zones will end up having to change. But as long as they're working, you just kind of keep them as is and kind of trust the system of where the psychology changes are. But yeah, it's an experience thing. And that's why I kind of like give the basics on what to look for and what I look for. Because to me, Fibonacci is not about price. It's about proportion. And I'm really trying to measure the proportion that's in the market, not really where the price is at. I'm trying to figure out where the people are changing their sentiments.
So you got a question here. How do you get the bull bear zones on RSI? Is that Fibos metric?
Yeah. I mean, I go back and I use trend lines, trend line breaks. Another thing I use is definitely Fibonacci, where trend line breaks and Fibonacci levels are in confluence. When you do some back tests and you look at, basically the best thing to do is just to go back, a couple of years and just draw all the trend lines you can. I mean, this is a basic way of doing it. And find all the best breaks of trend lines and find which ones actually had nice retests. When you break a horizontal or a trend line and it comes back, you find those. And then it takes a little skill of finding where those zones are. But once you kind of get the gist of it, it works like a charm, and it works in any market, any time frame, just like technicals in general. So it's not easy right at first, but I found something. I just found yeah, exactly. I just found something that's pretty unique, and I've just been in Fibonacci for so long. went down so many rabbit holes, and really kind of came up with this. And I just felt like it was my time to kind of pay it forward and kind of show, something I've learned, and maybe people can learn more from it. And
so I was asking if you could expand the RSI. Do you mind just pulling up the RSI so they can see it a little better?
Yeah.
There we go. Oh yeah.
Well, that's the ADX, but I'm trying to get it bigger. I mean, when
that's
you look back,
all you can do because it has another indicator above it. Yeah.
It just goes back forever. I do this manually. There are guys in my group that have actually, kind of created their own indicator to put the zones in. It doesn't build them for them automatically, but it kind of keeps the colors and all that. But I'm old school, like I said. I kind of like to stay in the charts. So for me, doing it manually kind of keeps my mind in on what's going on and keeps me focused and kind of keeps me away from the bias of all the shit you see on Twitter and all that kind of stuff.
There's a lot of shit on Twitter. So how many failed systems would you say you've had over the years? Because I always joke, like, I've tried every single thing and I literally came back to the dumbest and most simple one that I could finally find.
Yeah,
I just realized it was like over-analysis paralysis,
Yeah, many. And I think I probably went that full circle also, trying so many different indicators, so many different things. And really it comes back to simplicity. Once you find something that's simple and it works for you, there's no right or wrong. Whatever kind of system you can build for yourself. And really, it's not so much about the system. It's about risk management, knowing when to get in and out, all that kind of stuff. But yeah, I've done the full circle, working all the way back to simplicity. I mean, I've had so many over the years trying different things. But this one I kind of stuck with. It's been working with me pretty well for a while. So that's where I'm at.
So it's actually, we're in a green zone here, you said. So does that mean that maybe I should even ask a better question? If you could, at what time frames do you find this works and where does it break down? Because if you say pulled this out to the weekly, can it give you, or a monthly, can it give you a much better idea of the macro trend, or is it more of a trader's thing than an investing trend?
Yeah, I'm a swing trader, so this technique works best on the 4-hour and the daily.
My two favorite time frames, anyway.
Yeah, that's where it works the best. 4-hour is where I do most of my trades. I use the daily here as an example because I have a short-term book and a long-term book. My short-term book is my 4-hour trades, and my long-term book is my dailies. It does work on weeklies. It does work on different time frames. You just have to adjust the actual indicators themselves. On the 4-hour and the daily, I use 13 periods, which is a Fibonacci number. When you go to like an hourly, I use a 21 hour. When I go to a 15-minute, I use a 34. So you just have to kind of adjust the indicator itself based on the time frames. But 99% of my stuff is 4-hour and daily.
Don't try this at home.
Please don't try this at home.
But I was on the internet and I saw this guy and there was a line, and so I bought, and now I'm suing him actually for all the money.
No, not financial advice. This is just something to learn. So right now on my 4-hour, we are in the green zone and it didn't break down. If it would have broke down into the bear zone, I would have sold and got out. But right now, all my longs are still there. And it's still holding my threshold where I started the fib, based on the break into the bull zone. It's not looking pretty. Don't get me wrong. It's whipsawing back and forth. But again, it's like you have to take the trade because you never know when it's going to take off. But the good thing about this is it'll get out of that zone pretty quickly. So your 1% to 2%, maybe 3% losses are okay when you can get 10, 20, 30% gains on the trend. And that's the main thing for me.
That's so important, right? So like people who don't know, obviously see a system and they'll be, what percentage are you right? Or, how many, any system can be judged, should only be judged over like years and thousands of trades, really, right? So like you said, you have to take every single trade knowing that you're going to miss a bunch, but when you catch one, I can't point at it, but like with a huge trend, like in the middle, you're going to make tons of money and pay for every single loss that you took 10 times over. And then you can go back to getting chopped up, taking small wins and losses. right?
Yep.
So this basically prevents you from taking any massive losses and gets you on trend so that you can take the big wins to counteract any losses you take.
Yep. And this one right here was absolutely beautiful. This move right here on the daily, even though it came down a few times, it never broke into the bear zone until this point. So we rode this for a while. It was great. And then,
Pay for your year.
yeah,
right?
exactly. So, and then it broke down into the downside here. So we rode the bear zone. It actually almost tried to make a new high, but it didn't break out of the zone here. Kept us in the bearishness going down this way, and then off to the races again. But yeah, these levels in here definitely make up and really do well on the trend. But right now, we've been in this whipsaw, and that happens. We get into consolidating markets, and it sucks to trade. I call it the liminal space. It's basically an area that we are in one threshold. We're trying to jump a threshold from one spot to the other, and we're in this indecision. So I don't do a lot of trading when it's consolidating. I'll still do my trade here, but I don't add positions or I just risk management is I take the least amount of positions versus adding on until the trend's really starting to establish. And right now it's not really looking that pretty on the momentum, and we're probably going to whipsaw back and forth for a while longer. But right now, still in the bear zone because I'm still in my longs. Are we going to hold? I have no freaking clue. But right now, I like the way it's acting with some buying interest here, and it's holding the zone. So that's all I can do.
Someone had a question. Settings on the RSI just on the 12 close. I don't even know what that means, to be honest. Sorry, it was just someone said, what's considered breaking into bear zone when the RSI breaks below 50? But I think you basically explained that they're support and resistance levels and not necessarily just arbitrary like 50. But I mean, for people who just trade RSI, they view 50 as bull and bear zone, of course.
Yeah. When I'm looking at the daily here on this one, the zones here, they overlap each other. So this middle section is more like a consolidation type area, but right now the zone is 40.99 up to 80.61. So that area right there is your bull zone, and then the overlap is 24.83 to 57.64. So it's not those numbers will change. I mean, you can kind of try 40 and 60, if you want to try that, and 30 and 80 or something along those lines. It won't work perfectly, but at least it'll give you a sense of direction maybe. But the zones really are a measurement of where the sentiment and psychology is changing based on the fibs.
He was just asking what your RSI settings are, I think.
Just on the RSI, it's just 13 periods on the daily here, so it's just 13 days. I use that Fibonacci number of 13. I think if you look at the RSI on a standard package,
I think it's 14.
I think it's 14.
Yeah. That's because then there's always the argument over whether divergences are valid over 14 periods. I don't know if you got to run, but there's a couple questions.
No, I'm good.
How often do you question your strategy, and what triggers the review? Never.
when I get 2 or 3 losses in a row, I'll go back and check the historical accuracy on the zones. I don't do it very often. If it's a mature market that's traded and has some liquidity, the zones don't change too much. Now for trading some alts, and we're looking at some altcoins, those have to be maintained probably a little closer, depending on what's going on, those kind of things. But if it starts to click into the zone and starts to rally right back up, or vice versa, and it does that a couple times in a row, then maybe my zone's off, and I'll have to readjust it.
So guys, I'm going to do this thing. Oh, that worked. So where can everybody follow you after this? I mean, he's always here. We hang out in the chat all the time, but like I tagged it's Fiboswanny, SWANNY, FIBOSWANNY on Twitter, correct?
Yep.
And where else can people find you, learn more? I don't know.
Yeah, fiboswanny.com is my website. It's really just a place that leads to my Patreon. I just kind of have a small Patreon on the side that if anybody wants to learn, and don't get me wrong, it's not a signal shop. I'm not going to sit here and give signals.
Honestly, I didn't even know you had a group.
I kind of stay behind the scenes. I'm not a big. I go on shows for people that I like
Yeah,
like you.
Awesome.
I've been on Ched's. I've been on Crown's Crypto Cave. I've been on guys that I like their TA. So I don't really. I kind of stay behind the scenes a little bit. I'm busy during the day because my day job is. I mean, if you know anything about European energy markets, I've been busier than craziness right now. So.
I'm a full-time nickel trader. It's going great.
Yeah, exactly. So, yeah, fiboswanny.com and fiboswanny on Twitter is my main two spots.
Guys, everybody check him out, follow him, do all the things you need to do, and we'll see you back in the chat. Thank you, man. I really appreciate it.
You bet. Good meeting you, man.
You too. It's funny, we say good meeting you, even though we've chatted like 1,000 times, but this is the first time. It's like when you have a Zoom call in the middle of COVID and you're like, we're best friends now. I saw your actual face, right? Oh, I'm just going through the chat. Kelly's here. What's up, Kelly? I was on his spaces last night. I think I showed up, a couple glasses of wine, missed most of what had been happening. I went to like a diatribe on correlation. You guys know that I look at correlation sort of historically, and apparently I triggered like everyone. And then I think I did the thing where I went into spaces, I talked about what I was going to talk about, I threw a grenade, and then I signed off and went to watch like the Kanye West documentary or something. And apparently I left like a little bit of an explosion in my wake, which I had to kind of figure out today, which was always funny. Kind of my thing. I know everybody loves to run into a room, throw a grenade, and walk out and hope for the best. But Kelly, thank you. He's a legend for having me on the Twitter Spaces last night. I'm on some Twitter Spaces at noon today. Bitwage. Let me look. I can't even keep up with. Yeah, Bitwage is doing a Spaces. I'm going to be on that today at noon. Got a whole bunch of podcasts to record. So basically, I got to get out of here. Guys, that's it for the weekend. Be careful. Don't get chopped up. Maybe, I don't know, like go give a friend a hug or throw a ball with your kid or get a hobby, because this shit is rugged. Rugged out here in these streets. That's all I got for you guys today. See you on Monday. Peace.
That's dope.